Why is simple good when it comes to investing in trading systems? This is Bill Scheid from Applied Finance Research, and that's the question we're going to explore in this video. Some people have the belief or the bias that simple doesn't work, or they may believe that to work well and deliver high performance, something has to be complicated. But in the same way that some very simple tools have profound impacts on our daily lives, consider the wheel for example, very simple trading and investing systems can actually have high performance results. But why is simple good when it comes to trading and investing systems? Well, one of the many reasons that simple is good has to do with the problem of over curve fitting a system to historical data. For example, if we have a series of historical data, like what we're looking at on this chart, which is the ProShares Ultra S&P 500 from the beginning of 2023 to the middle of October of 2024, it could be possible to create a system that captures every top and bottom that we're seeing here. But to do that, we would have to add a whole lot of rules. For example, we could say something like, okay, use these 4 given indicators to tell us to buy here, and then use another 3 random indicators to sell here. And now let's look at a mathematical ratio that also factors in fundamentals, and that's going to tell us to buy in here. And now let's look at the cycle of the moon and the performance of a thinly traded commodity, and we'll sell here. And each one of these rules adds what's referred to as a degree of freedom. And simply put, the more degrees of freedom that a system has, the more likely it is that the system has been overly curve fit to the historical data. And this is where we run into a problem. The problem is that in the future, the price series of any given market is going to be different than what it was in the past. We have to remember that price is capable of an infinite number of permutations and combinations. So if a system is overly curve fit based on historical data, it's quite likely that its performance is going to suffer in live trading going forward over future data. On the other hand, a system with a simple set of rules will have a smaller degree of freedom, and that means it's less likely the system is curve fit to the historical data, and more likely that the performance will be more robust going forward over future data. But could a simple set of rules actually create excellent performance? And what about the belief that simple doesn't work and high performance comes from complexity, et cetera, et cetera? So to answer that question, as a thought experiment, I wanted to see how much of the price movement on this chart could we capture with the most simple set of rules possible. So I applied a system that has a set of rules that is exactly 3 rules long. Yes, you could write the rules in 3 lines. And to simplify it even more, it only makes trading decisions once per month, once every 30 days. So what do the results of our thought experiment look like? The system with these 3 simple rules captures the price movement that we see inside the white boxes here and returned 60.7% in less than 2 years with only 3 rules and only making a trading decision once per month. And if you're wondering if I curve fit these 3 rules to this series of data, I actually invented the rule set 2 years prior to the data that we're looking at here, which means that this is out of sample data for this rule set. I'm not going to divulge any details on these 3 rules out of respect for the people that have paid to learn them in our portfolio moving average course. However, as Dr. Ken Long, my mentor, likes to say, this set of rules is caveman simple. And that's the point of this thought experiment, and that's the point of this video. Simple can work extremely well and deliver outstanding performance. The wheel is quite simple, and yet it works extremely well. A fork is extremely simple, and yet it works extremely well. So in summary, a trading system doesn't have to be complex to work well and deliver outstanding performance. In fact, an overly complex system might actually be a setup for quite poor performance. So simple is good. This is Bill Scheid from Applied Finance Research. Thank you for watching and happy investing.